Scott, let me start with you because you seem in my note to be constructive about the state of the U.S. economy. The fundamentals look pretty good. And yet you are recommending adding to international positions overseas, international developed markets and emerging. Why do you favor that as a buy right now?
That's simply a reflection of what's going on in those markets this year. Recent volatility notwithstanding, they're down more, and that's been reflected in valuations. In emerging markets in particular, and it's hard to paint with a broad brush because each emerging market is so different, but in general, the valuation dichotomy between the U.S. and emerging markets is wider than it's been since the summer of 1998. Those are opportunities.
All right, Steve, why don't you chime in here and let us know what you see for the U.S. market in particular. And I note that you have pushed out your target on the S&P, which you thought would be hit sooner to later in 2019. Why?
Yeah, we've pushed it out, Tyler, out to the end of the year, 3,100. We took our economic numbers down, too. We think we're in an economic soft patch right now. I think you kind of came to that discussion you had earlier with your staff on what drove this thing down, but one of them certainly was the earnings season, starting out with the PPG call, the sense that, gee, there's something slowing down here. You had Powell stating probably incorrectly that the Fed was going to raise rates forever, and then you had oil collapsing, and I think it was a kind of a perfect storm for everyone to sort of hit on the brakes a little bit, tap the brakes, and we think there's sort of a little bit of a soft patch now in the economy. We've gotten a lot of decent news in the last week and a half. The Fed is sort of backing off the rate hikes. I think they go to one and done. That'll be good news. Oil seems to have gotten its act together. We got a kind of Goldilocks, I think, number today. 1.2 million was a good number. We were looking for something, $1 million, $1.5 million on the cut. A good Goldilocks jobs number as well. So the one thing that's still out there is the trade thing.
So if all of those numbers are Goldilocks, Steve, forgive me for interrupting, why is the market down 385 points or whatever the hell it is? Right,
because you didn't get Goldilocks out of the trade thing. You got, that's the thing, right?
You got a wolf in there, right?
Yeah, we got, this back and forth within the Trump administration. For me, as a kind of rational investor, I think a lot of people look at this and say, what would you expect? They're going to negotiate right up until this 90-day deadline. So I view it as just, the back and forth that you get, good cop, bad cop, if you want to call it sort of a Goldilocks kind of thing. But it could be it goes somewhere else. And we've got to get a resolution on that, I think, for the economy to relift, giving everything else that's going on that's positive, and then the market to relift with it. So that's kind of where we see things.
So, Scott, you sound like you're a little bit more defensive when it comes to positioning your U.S. part of your portfolio.
Again, it's just a reflection of where the valuation opportunities are, coupled with the idea that I do think 2019 is a story of moderation. We've had a tailwind of tax cuts, both for corporate earnings and for GDP as well. That moderates back to a more durable, more sustainable level in 2019. I don't worry about a recession in 2019, but a more moderate economy where I want exposure to consumer spending. That finds its places in consumer staples.
Even though the economy is moderating, you think spending will hold up?
Yes, and every evidence, the labor market, strength of the housing market, anecdotal evidence from Black Friday, early Christmas sales, every indicator points.
The home builders haven't been doing well, and that's a part of discretionary.
It is. That's mortgage rates. Rising mortgage rates have certainly hit the home building industry. It has not hit home prices. That's the store of wealth for most American families.